Please make sure to like, subscribe, and share. Now let's get started. Cash flow. What is cash flow? Cash flow is very simple. It is your monthly rental income minus your expenses, and you're left with a number that is defined as your cash flow. You have some investors who calculate cash flow one way, you have others who calculate it another way, and I strongly believe that there is an incorrect way of calculating cash flow, and there are a couple of ways that are the correct way to calculate cash flow. So let's start with the incorrect way. The incorrect way of calculating true cash flow is when you take your rental income and you only minus your mortgage, taxes, and insurance, and you're left with a number that some believe to be their cash flow. That is not your cash flow because you are leaving out other expenses. Now, these other expenses are property management fees. Whether you hire a property management company to manage your rental properties or you do it on your own, you're wasting your time, your energy, so you have to account for that. Number two, maintenance. You're going to have maintenance issues when you own residential rental properties. Maintenance issues could be a clogged toilet, a clogged main waste line. It could be hiring pest control to come out to handle mice or roaches. Number three, vacancy. Now this is very important because there are three expenses that fall under this category. The first expense is the property is vacant. So during the time the property is vacant, you're not getting any income coming in because there's no tenant living at the property. Number two is the repair expenses. You're gonna have to repair that property to get it to a condition to where a new tenant can now come in and live there. Number three, tenant placement. Whether you hire a tenant placement company and pay them to find a tenant for you, or whether you do it on your own. If you do it on your own, you gotta account for the time that you spent and what your time is worth to you. And number four, capital expenditures. Now these are the big ticket items in residential real estate, such as your water heater, your furnace, your AC unit, your roof, etc. So all these things, although they do last a while, they don't last forever. So for example, if you do the Burr method and everything's brand new in the house because you bought it, you've renovated it, maybe you put a new furnace in it, and that furnace is gonna last 15 years, after that 15-year mark, you're gonna have to come out of pocket, let's say $3,000 to buy a brand new furnace to put in there to replace it. So what you would do is you would take the life expectancy of that brand new furnace, 15 years. If it costs $3,000 to have it replaced, you would divide that by 15 years and account for that every single month, set aside for capital expenditures because it's going to break down in the future. So guys, that is the true way to calculate cash flow. And to summarize it, it is you take your rental income, you minus your mortgage, your taxes, your insurance, and then you have to account for and subtract your maintenance, property management, vacancy, capital expenditures. And I want you guys to keep that in mind when calculating your cash flow. Also, when you're analyzing a deal, that is extremely important. I hope you guys like this video. Please give it a thumbs up, share it, leave a comment in the comment section of anything that you want to see. Cash flow, baby. Let's go.